Hello there, traders. Welcome to today's live stream. My name is John, Senior Market Analyst here at 𝖢𝖤𝖣yi. We're going to be taking you through the markets today. We're going to take a look at some key data. Some key data has just dropped. I haven't looked at it just yet, but it was the CB consumer confidence, which has come in down again to 92.9. So we'll see how the stock market is reacting to this just in a moment. But yes, welcome to the live stream. It is Tuesday the 25th of March, and yeah, hope everybody is doing pretty well. Let me know who's in the chat. We've got Vincent, welcome, hope you're doing well. Too Harmy, hello to you. Big shout out to Dan, welcome, and Tunji, hope you are all doing very well today. So some really interesting developments going on in the market at this current moment in time. One market in particular that seems to be doing pretty well is silver. And I know I've been banging that drum about silver for a while now. I feel like when one market is doing well, it's good to talk about it. So silver doing extremely well at the moment, seeing a continued kind of push to the upside there. So I'm going to talk about silver a little bit in depth again as well. I know some of you that are regulars to the live stream might be thinking not silver again, but I do it out of the importance of showing you guys what's moving within the markets at the moment. So let's get into it. We've got some key data. Obviously the US, if that was going to highlight for me, the US CB consumer confidence just in here just came in at 92.9. okay, so I can actually update this, go down to the consumer confidence. What was it? 92.9, so another negative number, down from the 94.8, wasn't it? 94.2, sorry, 0.2. And the previous was it's actually been revised a little bit higher from 98.3 to 100.1. So 100.1. So that's still going to get a -2 reading from the data, just because it's lower than the previous and lower than expectations. So let's go see how this has impacted the markets, and then we'll go talk about some of the markets that I'm really interested in at the moment. Let's take a look at what's happening over on the S&P 500 after that data. We can see a little bit of downside, nothing aggressive here, just a little bit of downside. I wouldn't say that's anything that's kind of shown you that there's some real aggressiveness in the market. If we go down into sort of a 5-minute, you can see that it started to kind of give a little bit of volatility there, but that hasn't actually moved the market. And you know, let's face it, the reality of that is consumer confidence is down. We know this has been the narrative of the market for a short while now. So is that something that is kind of just now priced into the data with that kind of fall that we had recently? You know, potentially, you know, we're starting to see some more kind of bullish signs now, especially with the idea that Trump isn't going to necessarily tariff the living daylights out of everyone. He's going to just tariff those markets that are in surplus with the US. So there is that kind of part to it as well, where we're seeing this kind of recovery in the stock market. I think for me, one thing that we just continue to keep our eye on from a stock market point of view is the volatility index. Okay, below 20 is usually a good sign for the stock market. We're now successfully closing below that 20 level. So I think for me at the moment, market's starting to switch a little bit back to risk on sentiment. We've seen the Australian dollar perform pretty well recently. That was some data out of Australia came out with regards to some tax cuts for everybody in Australia. So that's taken as a bit of a positivity, along with just general market sentiment, I think has been pretty well. But let me know how you guys have been getting on recently. My March hasn't been too successful. I'm up on the month, but not as much as I would like to be. Usually I try to aim for at least 4 to 5% return every single month, and I'm not quite there at the moment. So hoping that the end of the month goes pretty well. This week I'm hoping for a little good run up. Had some really successful trades on silver, but gave a lot of that profit back by trying to buy cable recently. So that wasn't fun for me. But still starting to see some kind of market movements at last. So volatility coming in a little bit lower is good there. What are we going to be looking at going into this trading week then? So there's a lot going on. I feel like there's a lot going on in the markets at the moment in terms of sort of data points, which is great. But we're going to kick it off with the currency strength meter. And then we're going to go through some sentiment positioning from the commitment of traders. And then we're going to see what kind of data is coming up before the rest of the week, because we do have some pretty important pieces of data for us just to keep our eyes on. So when I looked at the commitment of trader reports data this week, the strength and weakness report this week, some changes. Euro no longer on the radar of the strongest currency, seeing quite a considerable pullback. So yes, I was Euro Oz long last week, but I took that out earlier today for a very, very small loss, because I didn't like the fact that we changed these narratives here on the strength and weakness report. It went from +7 to +2, so there was quite a considerable downside there to Euro positioning. The pound still remained fairly strong, remained at that +5, so there was no change coming from the pound. The Australian dollar was the weakest currency, or is the weakest currency at the moment, but in that reversal zone. And look, we're starting to see that reversal form already on Monday, Tuesday. New Zealand dollar, strong currency. Quite like the idea of buying Kiwi. I was potentially going to buy it against the US dollar today, but I didn't do it in the end. I kind of waited a bit too long now, and that market's kind of gone a little bit. But we can discuss that today. US dollar remains the same, pretty weak. CAD started to show some gains back. Swiss the same, and start to see a little bit of weakness coming into the Japanese yen, which is something that we expected going into these past couple of weeks, especially because of the recent changes in the commitment of trader reports, as well as just data out of Japan has been kind of expectations. There's been no shocks. Tokyo core CPI came out, okay, or BOJ core CPI year on year came out, 2.2%. There was nothing really shocking there. If that had risen or gone higher, then yes, we would have seen that kind of Japanese yen strength, I feel, in the markets. One other Japanese yen data I am keeping my eye on is that Tokyo core CPI later on the 27th. If that starts to rise, then we might see some Japanese yen strength again coming back into the market. But at the moment, nothing really shocking about the latest data out of Japan. So we're not really seeing too much movement going on over there right now. But taking a look at the commitment of trader reports, what have we had? Japanese yen reducing positions. So what we've seen is a increase in those short positions there, okay, a decrease in those short positions there, and also a decrease in long positions. So essentially what they're doing is getting out of those longs that we've seen very aggressively recently, which no surprise, right? We saw that they were at a significant level when it comes to positioning, right? When we go take a look at what the commitment of traders were doing, they were at their sort of highest level in history, and that can often lead to a short-term pullback, or I think it's going to be a short-term pullback in this state, just because the market at the moment I still feel is leaning towards Bank of Japan rate hikes. So I don't think the downside that we're going to get is going to be aggressive. I think it's actually going to be a little pullback and then a continuation up into the next highs here. But you can see the sentiment from hedge funds, very aggressively buying into the Japanese yen right now, which is why we're seeing that sort of dollar yen move, kind of pull back, right, in the market. So let's go take a look at some charts. So let's look at the majors first. Let's take a look at euro dollar. Euro dollar starting to pull back a little bit from these highs. This is something we kind of expected. Usually after quite a large move to the upside, it can follow a period of sort of consolidation or a period of the market pulling back. So I did expect some kind of rally to kind of fade here, which is exactly what's happened so far. That being said, one big clue for me was in the differentials between the bond yields. If we take a look at the 10-year euro bond yields, or what you class as the Bund, right, minus the US 10-year treasury yields, you can see that we saw that pullback coming. Okay, the market started to pull back. This happened before euro dollar hit those highs, right? So that pulling back there is like a leading indicator for us to say that yes, euro dollar was likely to pull back going into this trading week, and that's exactly what's happened. Starting to see a little bit of a rebound here. Does that mean that we're going to see a rebound in euro dollar? Potentially. Okay, so I quite like where euro dollar's at. I feel like there's three kind of levels for me to be interested in euro dollar. The first one is kind of where we're at here, this kind of 1.08 handle. I think if we can hold here, I wouldn't mind looking to maybe try and buy in, with the potential of it kind of breaching 1.09 and start heading a lot higher. My most kind of favorite area to try and get involved is going to be down towards this 1.06. Right now, currency strength for me is saying, you know, euro is losing a bit of strength, so I would like to see this market trade a little bit to the downside. When we look at the positioning from the hedge funds, though, they added 46,000 contracts long. Okay, and that was mainly down to the fact that they reduced their short positioning significantly. Now, whenever I see this, and you guys know that I look at commitment of trader reports a lot. Okay, hi Ratish, you're doing well. I always kind of ask myself, why are they doing that? Okay, and I think it's an important question to ask at any point when you trade in the market. It's always why is the market doing a particular thing? Now, when I look at sort of why hedge funds on euro, okay, would be reducing their contracts significantly to the point of where it means they've kind of added into their longs essentially by taking away those short positions. We ask ourselves why. Now, there's kind of a few reasons. Main reason for me is probably the stimulus that's coming out of Germany at the moment, alongside the stimulus that we saw from the EU Commission. So those two were providing lots of stimulus to the euro at the moment. And then the third year thing is obviously the differentials in bond yields, because basically what we're starting to see is that bond traders in Europe are pricing in potential rate hikes in the future. And we're seeing the opposite in the US right now. So I like the idea of buying euros, and the kind of the hedge funds are kind of backing that up as well with their positioning. What pairs are you interested? I'm looking to yen short. Yeah, I don't mind. As in, you're looking to short yen as in like sell the Japanese yen, or you're looking to kind of, when you say yen short, do you mean dollar yen short, or? Couldn't find the link to the live stream. Oh, okay, well, I did post it earlier. The link only goes out to YouTube now. I need to work on getting that set up, so we set up like an email blast that goes out or something in the future, where we can kind of get people in. So I'll work on that, Ratish. I'll speak to the guys behind the scenes, see if we can get something together. To get something sorted there. But yeah, essentially, if we go take a look at what's on my radar this week, it's not a lot. It's not a lot, Vincent, when it comes to like looking at what we're doing. Japanese yen still fairly strong, coming off that with reversal signs now. So could we see a little bit of yen weakness coming in? Absolutely. I do still like the idea of seeing sort of Kiwi, well, I was going to say Kiwi yen longs, but you know, I want to try and see if there's kind of like a bit more momentum behind it at the moment, because we've seen that kind of pullback last week, which was great, fantastic. But the weekly closes across the dollar yen pairs, or the yen pairs, weren't great. So I think for me, I was trying to see if we could have like a very strong close last week. That would have been like a good change of sentiment. But when I look across the board at actual yen pairs, like let's go take a look at dollar yen, for instance, and we'll pop up to the weekly chart. Look at the price action from a weekly chart point of view. It doesn't really come across as kind of like, you know, aggressive yen selling, right? At that point. So, I mean, don't get me wrong, dollar's weak anyway, so we're not really going to get that. But let's pick out a currency that was strong last week. One of those, that was New Zealand yen, right? Because we were looking to buy that market. And it had a storming week. But at the same time, look where it closed. So we opened here on the Monday, closed here on the Friday. That's not really what I want to see if I wanted to see some real kind of turning momentum there. I think for me, a close above that 87 area on the weekly would have been something I'd have been very interested in, seeing a continuation. But that there just shows a lack of, for me, a lack of intent for further upside at the moment. You know, we do have this nice double bottom pattern that played out, price broke out. We came back down into this area. This was a level I was interested in going long. And when I look at the 4-hour chart, I was really looking to see if we got some kind of, you know, momentum break here. I was actually kind of looking at these highs in there, and then I looked at those highs. And yeah, look, we did get a breakout, but price has just gone sideways. You know, that's not really what I want to see if I want to buy the market. I want to see sort of this aggression, okay? Whereas if you had bought here and the market's just gone sideways like that, not great for me, to be honest. If we go take a look at pound yen as well, this market's starting to come off here. This was actually an idea we spoke about last week for a potential double top and a break to the downside. I don't really want to touch the pound right now because we have the UK spring statement coming out tomorrow, where there could be a possibility that Chancellor Reeves talks about tax hikes. And if we do see the UK government hiking taxes, that's only going to hurt the consumer more. When we have a look at what's going on in the UK, right, and we have a look at some of the latest data, especially when it comes to sort of growth, we can see that, you know, last retail sales were pretty good, but when you look at sort of things like core CPI, that was high. GDP growth came in at minus 0.1%. Claimant count change, those that are claiming benefits, rose to 44.2. Unemployment rate has stayed fairly similar at 4.4%. So, you know, average earnings come down to 5.8%, down from 6.1%. So, really speaking, at the moment in the UK, it's not looking particularly good. I need to update a couple of other things here. I need to update the COP reports and stuff to this. But I'm a bit worried about the pound, I must admit. Although we've started to see some decent strength, and on the strength meter, it is the strong currency at the moment. It's the orange line. Stayed pretty consistent at the top spot for the past 4 weeks. I don't know whether the narrative of that's going to shift slightly. Let me have a look at here. I might need to update the spreadsheet, to be fair. Yeah, because we've got CPI data coming out tomorrow. This is what I was talking about in terms of UK data that you need to watch out for, because if we do see tax rises, what does that do? It puts less money in people's pockets. If people don't have the money to spend, then growth isn't really going to happen in the UK. So I'm very interested to see how that plays out. So I'm not really touching the pound right now. That being said, look at retail sales. The forecast on retail sales, 1.7% down to minus 0.3%. Not looking tasty there for the UK at the moment. So, I didn't realise it was daylight savings coming up on Sunday. There you go. Something to note for myself. Means the clocks will go forward for me. But yeah, even if we kind of look at what's going on in the pound side of things over here, they're not really getting aggressive hedge funds either, right? They're not really getting super aggressive. In fact, they added to short positions, also added to long positions. They're kind of like hedging their bets on the pound at the moment. And yeah, I don't really expect pound to do a fat lot. So when it comes to pound yen, you know, I talked about this 94.50 level being quite a key level. So I think for me, is this going to be the sticking point for the pound? Let's say Chancellor Reeves comes out tomorrow, says tax rises in the UK. I think we're probably going to see pound yen down. I'm probably going to see it at 192 because I think that's quite a significant shift in fiscal policy when it comes to what's going on in the UK. If there is no talk of tax rises, then I think that's going to probably be a bit positive for the pound. And, you know, we might see that move above 194.50 with a move back up to sort of that 199.25 handle. But I don't know whether I see that happening. But again, that's just me kind of predicting what could happen. I will wait to see what happens in terms of data and then try the sort of aftermath of that. I'd rather see what happens next kind of come through and see if we can get that move to the downside there. You know, when I take a look at sort of UK bond yields, you know, they're up at 4.7. So they are technically above current interest rates in the UK. So the market still maybe still kind of more on the side of a hike than anything else. But we'll see how that pans out after tomorrow, because I think if Reeves announces a significant change in tax hikes or tax cuts, well, not tax cuts, tax hikes, sorry, then, you know, we might see quite a significant change to this setup here. So yeah, I can see where you're coming from, just from a currency strength and weakness point of view, you know, and adding that to the market. Yes, you know, we've got the currency strength meter suggesting that pound is still a strong currency, Japanese yen is getting weaker. So from that point of view, I understand why you would be looking to buy that market. But at the same time, fundamentals still matter. And I think that you know, that narrative hasn't changed too much for me. So I'm not necessarily looking to buy pound. I think the only market really that we could get a little bit of a move on might have been euro pound, might have been pound Rs. Now I say euro pound very loosely, just because we have started to see this kind of weekly range begin to form. You've got these kind of lows down here at the 82.50s and then these highs up at the 84.50s. So I think for me, kind of seeing this kind of range, I quite like the idea of kind of being short up here, long down here. And I was looking at the price action. I can see we're kind of trading lower at the moment. It looks like we're about to kind of take these lows and move higher there as well. So I kind of like the buying of the pound, but at the same time I don't, you know, so I'm kind of on the fence. And I think if I'm on the fence about a currency, I don't think we should trade it, or I don't think I should trade it, at least. That's just from my point of view. But yeah, you can kind of see this daily trading range playing out. And you know, if you want to trade the range, you want to be buying at lows, selling at highs. And this little bit in the middle, not so much. So I want to see if we can kind of get down towards this 82.50 on euro pound. Whether we get there now because of the situation, I don't know. But I think if we did get to here, I wouldn't mind looking for the long opportunity on euro pound. because that'll be kind of selling pound. I mean, pound Oz came into these highs, rejected. I quite like the idea of seeing this market try and break higher. But again, fundamentals have kind of switched a little bit. Just keeping an eye on silver. Let's go take a look at silver then, because I am long twice on silver. I have 2 positions long on silver at the moment. This is that move that we've been talking about, essentially. We were, after price came back up into that kind of $34 level, we were talking about waiting for that sort of pullback, waiting for the market to come back down towards that kind of $33 level, and then look for the sort of move higher. So what I've done here is exactly the same as what I've done before. The first position I actually took down in here. Okay, so after we kind of had this like breakout here, right? I'll just go to the hourly chart. Basically, we had this nice little downward move there, right? And the market just kind of consolidated in and around this point. So I managed to get into a position in the morning. So kind of around that $33.10 area. And then my second position is a little bit higher up. It's around 33.30 is my 33.30. Yeah, 33.30 is my second position. So that's my first position is 33.05. Okay, so 33.05. That's my first position. This is my second position. Market is starting to push nicely to the upside. Looking to see if we can go target $34.50, and then to see if this silver train continues to ride higher. I think, you know, one thing that we've been talking a lot about is that gold silver ratio, and it came back up yet again into the 92s, and we're starting to see that push lower again. If this really does start to break down, I think we are going to see that big setup, that big long sort of opportunity coming in on silver. At the moment, we kind of get down and then it rallies again, get down, rallies again. So there's a lot of choppiness going on here on the gold silver ratio. But I think if we breach this, you know, I think that would be kind of like a good sign that we're going to see some further downside and some further upside in silver prices. So I like the price action going on here at the moment. Ultimately, I'd like to see this kind of trade up into 35.50s. I think if we take 35.50s, then $43, $44 is on for the potential remainder of this year. And that's something I'm really, really focused on. I'm really kind of, you know, hyper focused on pullbacks on silver, to be honest. Every kind of pullback I feel like I've bought into. So yeah, looking for that continuation of that trend ultimately. Afternoon, right guy, hope you're well. What do you think about the Oz pairs going to interest rate announcement 1st of April? Yeah, I mean, the Australian market is a really weird one, in my opinion. And I say that because the Australian dollar, and I said this at the start of the year, I said the Australian dollar is going to either have a make or break year. And the reason why I thought that was because the Australian dollar has been down because China has been down, to put it simply, right? The data out of Australia isn't necessarily too bad. Yes, inflation's high, and obviously inflation devalues currencies, right? But at the same time, the RBA have kept rates relatively high. They haven't really gone as aggressive in cutting rates like others, because they want to see inflation rates comfortably below a certain percentage. So yes, rates above inflation levels above a certain level devalues a currency. But at the same time, you know, they've kept rates a little bit higher. If we go take a look at sort of Aussie US dollar here, you know, that the market's been down because of the poor economic growth in China, but China is now starting to show signs of a recovery. That being said, a recent announcement came out today that the Australian government are cutting taxes, right? So that's going to put more money into the pockets of Australians. And at the same time, what does that do? They go out spending, things like that. I haven't actually got a fundamental tracker up for Australia, but we can just go to here. I can go for, we'll just go for a month's worth of data, and we can kind of check out a few things. We'll just take off the yellow folder news for now. So retail sales were actually sort of down, minus 0.1%, down from the previous 0.7. So that wasn't great. Okay, but then we've had a rate cut since then, right? Employment change up to 4.1%, but nothing kind of aggressive there. CPI down at 2.5%. Look at GDP. GDP was up, and the recent retail sales was up. So these are more recent figures. So actually, when you look at the grand scheme of things, you could argue that that rate cut has almost, been a bit more positive for the market. CPI being a little bit lower, also been a bit of a positive for the market. Retail sales 0.3% up from minus 0.1%, GDP up at 0.6%. So, I don't think the RBA will cut rates, put it that way. I don't think the RBA will cut rates. Let's have a look at the central bank. Let's have a look. So the expectations of a 25 basis point rate decrease has changed slightly. So you can see here, sorry, I was just looking at what that table was. So I couldn't work out how it was presenting itself then, because it was like rate decrease and then expectations of a minus 25 rate. I just thought that's an interesting way to showcase the data. But you can hear on this little table here, right? There is a 92% chance of no change coming from the RBA in the next meeting. Okay. So although there's not like a massive amount of growth in Australia right now, it's still not necessarily an economy that I feel is underperforming. So, that 92% chance of no change makes a lot of sense. That was a bit different when you look at the 12th of March. There's an 86% chance that we were going to see a 25 basis points decrease. But that has completely changed now. I think recent inflation data, recent retail sales data kind of put that into play there, that we were going to see a 92% chance of no change. Okay, you can see the futures implied yield curve here as well. Official cash rate is 4.1. Implied yield is 3.36. So just slightly, ever so slightly below. So basically this kind of plays into what RBA governor was saying in terms of the market has been pricing in these cuts from the RBA. She wasn't so confident that these cuts were coming. So I feel like maybe the market has mispriced what the RBA are going to do. So, I think if we start to see better performance in China, better sort of risk on environment in the market, then I think the likes of the Australian dollar could start to perform a little bit better. On the flip side of that, if we start to see sort of continued poor data out of China, then that's going to have a real knock-on effect because one of the biggest trading partners with Australia is China. Whatever happens in China has a knock-on effect on Australia and New Zealand. Looking at hedge funds though, they are still selling Aussie, and they're still selling. So I'd like this to maybe reach an extreme. I think if that reaches an extreme, so we've got minus 70,000 contracts now. The lowest it's been in 52 weeks is 105. So I think if we got like an extreme being reached, I would be looking a little bit more of like, okay, maybe this Aussie weakness is going to turn. Maybe something with that kind of 100,000 contracts there. If we see that reached, then we might see a bit of a reversal in price. Hopefully that makes sense anyway. I was actually long Euro Aussie, but I stuck myself out for a very short, small loss. I basically saw this breakout here, so I ended up going long at 172, and it just kind of hovered. And then yesterday we had this kind of breakout, close back above, and I was like, okay, that's not too bad. And then later in the evening it had a close below, and I was like, this market is just going sideways, right? It's just going sideways. We attempted to try and break out a couple of times, couldn't hold. So I took a very, very, very small loss on that trade there. And I'm glad I did, actually, because the market has continued to fall back. I do still like Euro Oz higher in the short term, because I'm a big fan of buying Euro at the moment. But at the same time, you know, we've gone a long way. So maybe me trying to buy in at these points was probably not the best best thing to do in terms of like reward to risk and things like that. So maybe if we get more of a sort of, whoops, didn't mean to do that. Where's that gone? Oh, maybe if we get some more like a move back down into these kind of opens and closes, then maybe we'll have something, you know, something to kind of bite onto at that point. You know, I liked Aussie Swiss short as well. That's kind of gone sideways now. Aussie yen kind of fighting back a little bit. Aussie Kiwi is an interesting one, because we broke out of this major trend here. Kiwi's been a lot stronger than Aussie recently, and that's reflected in the Aussie Kiwi pricing. And we're kind of pulling back here. So maybe there might be a bit more downside to Aussie Kiwi, you know. That might be a market that I want to target going forward. Stocks are still starting to rally again here. This is something that I like. Yeah, waiting to sell Aussie Kiwi. Yeah, I don't mind that short, to be honest. Especially with the sort of sentiment data at the moment. You've got this nice consolidation up here. Market could be trying to target. Sorry guys, that shouldn't be red. I don't know if this happened to anybody else earlier, but I was speaking to somebody else and it happened to them. My trading view toolbar just was gone from the app. This is the app that I use, the trading view app, and the toolbar was gone there. So I had to clear the cache out and everything, but at the time I was like, why is this not working? Re-uploading it 4 or 5 times. But yeah, I kind of like this little move that we've got in Aussie Kiwi. Maybe if we push up into this level here, I'd look for some downside in this market. One market actually that I was going to talk about today that I don't think many people trade is dollar NOK. Does anybody trade the US dollar, Norwegian krona? Does anybody trade the Norwegian krona? Let me know in chat. I'll be interested to see if you do. This is a market that we spoke about a while ago because we wanted to short Euro NOK, which now seems like a very good idea because we were talking about getting short. Pretty sure we got short here. That's why that black line's there. And then once it kind of really cleared this level at 11.6, it has started to kind of float through now. But we wanted to buy the Norwegian krona. And I just had a little look at dollar NOK because I was curious to see where it is. It's not necessarily a Forex pair that I will kind of include in my week-to-week analysis. I usually kind of take a look around the sort of time that sort of key data is coming out. But I completely, forgot to look at it. And look at this move that we've had on dollar NOK. That has been a significant move to the downside, 7.5% since the end of February, which is quite a considerable move. And I was looking at kind of why this situation was happening, and I found some really interesting insights. So first of all, when we look at the Norwegian krona data, right? Retail sales recently in February, previously 0.1%. Forecast was minus 0.2%. So the market was thinking that this was going to come in a lot lower. Absolutely smashed expectations, 1.1%. Okay, so that's a big plus there. The Norwegian unemployment rate, okay, January's employment rate, we saw a move from previous 4.2 down to 3.7. So that's a 0.5 basis point move. Forecast for 4.2. So again, another big strong plus. If this was on my forecaster, I'd be like, that is a big plus 2. That is a big plus 2 for the Norwegian market. And then we come down to sort of inflation data. So the inflation rate year on year rose to 3.6%, okay, up from 2.3%. So what this is kind of telling me is the fact that employment is pretty good. Consumers are spending. Inflation rates moving higher. What is a central bank likely to do if those conditions remain? Hike interest rates. So this is another one of those situations where I'm like, okay, well, what do markets move on? Markets move, currencies move on interest rate expectations, okay? This may be a controversial statement, and some of you might log off right now, but the markets do not move because there is a head and shoulders pattern on US dollar yen, right? Or there is a double bottom pattern on this particular market. Markets move on interest rate expectations, okay? Especially when you deal with currency markets. Now, let's go take a look at those. This is the great thing about this. We can go take a look at expectations, right? Where are expectations found? They're found in bond yields, right? Because bond traders are trying to predict the future interest rate changes, okay? That's why when I talk about sort of dollar yen and I look at sort of the US 10-year bond yield together, it's because of that expectation of what's going on in the future. If we look at the US 10-year bond yields recently, they've fallen, right? That's because market is expecting that the Federal Reserve are going to be cutting rates in the future, okay? That's why you're seeing this downside to the US dollar right now, because future rate expectations are lower, okay? So when you go take a look at, one thing that I would suggest you go and do if you want to get sort of, you know, dive deep into why currencies move, go take a look at bond yields, and especially take a look at bond yield differentials. Now, again, it doesn't work all the time. There are parts where we do get that kind of divergence in it, but a large majority of the time you do. So for instance, you know, if we go take a look at, let's give you an example first. Euro dollar, I've used this example quite a lot recently. If you take the German 10-year bond yields, you can take the EU 10-year bond yields as well, but if you take the German 10-year bond yields, take away the spread of the US 10-year, okay, and you can compare that to the chart, right? What I'm going to do is just put this on a new price scale, okay? What you tend to see is bond yields move first. So look, we had this really nice rally up against euro dollar. Now you may be thinking to yourself, I wish I got into that move. Well, if we kind of look a little bit further back, the bond yield differentials were going before this actually occurred, right? They were breaking into new highs here, okay? So you would have been suggesting to yourself, if you were watching this market, that you want to be long euro, for instance, or be long euro dollar. And look, that market has taken off to the upside. Again, this is why I felt that there was a pullback coming, because what I saw was the spread or the differential between the EU 10-year and the US 10-year was pulling back. So I felt that maybe we were going to get that pullback. If this starts to go again, yes, I want to be a buyer of the market, okay? If we look over here, right, breaks down. Where does this start breaking down? A little bit earlier than the actual fall in price, okay? So this is something that you want to try and take into consideration, especially when it comes to your trading, when you want to be looking at these differentials. Now, if we go take a look at Norway's 10-year yields, they're up at 13 0.6%. Actually, I need to change that to regular. They're up at 4.17%. Now, Norway's interest rate is up already at 4.5%. So we're not too far away from those moves. But look at this move that we've had higher. Now, this is the formula you want to do, okay? So we're going to go NO, which is Norway, 10-year, okay, minus US 10-year, right? So you've got the United States government bond yields and you've got the Norway government bond yields, okay? And all I'm going to do is hit enter. This is the great thing about using TradingView. Look at this chart, right? Now what I need to do, I need to actually inverse it, okay? Because if we inverse it, this is the dollar NOK chart, right? If I go to US dollar Norwegian kroner now, and we hit add dollar NOK to compare, okay, hit pin to right scale, okay, sorry, done it the wrong way around, I need to flip that over because I've inverted the scales now. Will that invert both scales? There we go, right. So what we can see, because the Norwegian kroner is stronger, right, or the yields are stronger, we're seeing that dollar NOK. Is that inverted as well? Yes. This is why I shouldn't invert it. Right, give me a second. I'm going to do it the other way around. US 10-year yield, so it matches up with the currency price. NO 10-year yield. That's what I should have done. Okay, so 10-year, 10-year, then hit enter. That's what I should have done. So you can see the correlation between the two. I was doing it the other way around because I've pressed invert scale on here. Yes, so essentially what we have here is the US 10-year bond yields are losing out to the Norwegian 10-year bond yields, and the market is driving lower. Look how this impacts the price, right? You can see when we get those nice sort of downside in the yields, you know, it can drag the currency down with it. Not to an aggressive extent, but if you could look at things like this scenario here where you had a nice rebound in dollar NOK prices, but you know that the bond yields are pushing to the downside, you could maybe try and sell those rallies, right? For instance, market rallies, you know that the US 10-year minus the Norwegian 10-year is down, sell the rally, right? Prices then hit a low, we start to see it break, trend starts to start trending to the upside, you want to be buying those lows, and then vice versa. So that can be a really good indication of what's to come on future pricing, okay, when it comes to dollar NOK. On any other market, really, you can do it on anything, right? So let's look at Euro Aussie, right? So let's say if I want EU 10-year, okay, oh, that's not what I wanted to do. I wanted to hit the right, type in EU 10-year minus AU 10-year. Okay, so you've got the Australian 10-year bond yields, Euro bond yields, okay, hit enter. That is pretty much a Euro Aussie chart, right, that you've seen recently. Again, if you just add that to compare, pin new scale to the right hand side, there you go. Okay, so I really recommend kind of having a look at this, especially when I like to look at when the differentials cross like the 50 moving average. So when you see this kind of downside move here, just using this example, I'd look to kind of sell rallies on Euro Aussie. So, you know, these kind of highs in here, this will be on a daily chart, so you can try and get a little bit of piece from these kind of highs. Maybe when it pulled back up into this kind of area here, you could look to sell down and then sell that kind of pullback as well. Maybe sell this one in here. This time though, market then starts to break up above that 50 moving average, so you'd be looking to kind of buy dips essentially in the market. So that's what I kind of like to do. I kind of like use these to kind of give me a sort of sense of where bond traders are positioning themselves, because, you know, ultimately they can almost dictate what happens when it comes to interest rates as well. We've seen this in the past where there's cases of what they call bond vigilantes. And ultimately, it's why Liz Truss left Parliament in the UK. Or she was Prime Minister for about 40 odd days, I think it was in the end, because UK gilts kind of went for the floor and forced her out, essentially. So yeah, always kind of consider, if you look trading currency markets on a regular basis, always consider interest rate expectations. And that's why we look at all the data, really, isn't it? It's, you know, the inflation data, the GDP data, you know, it's all leading back to sort of interest rates at the end of the day. Could you do a session on this, please? Yeah, I'll make a note of it. I'll make a note of it. You know, but it's like looking at sort of GDP differentials between countries, bond differentials, interest rate differentials, things like that. But really interesting to see that Norway, or the Norwegian krona, is getting very, very strong at the moment. You know, it's been very weak since, look at that, since 2013. And we're starting to see a bit of a change in this narrative now. Interestingly, Euro NOK is down quite a lot. Consider how strong the euro has been. Seeing that market kind of blow lower is interesting as well. But those are the only two Norwegian krona pairs I tend to trade. Maybe pound NOK would be good, but I don't tend to trade that market all that often. But yeah, look, we've kind of broken out of this consolidation market, starting to really break down here as well. So something to look at going forward for sure. Stock market seems to be rebounding nicely again. VIX still kind of pushing down, which is good. I don't think there's anything more on the slate today. Let's go back up here. No, not a lot for the rest of the day. New home sales also came in a little bit lower, 676, kind of showing you that there's, you know, maybe people aren't thinking about moving at the moment. Also, guys, if you want this RBA rate tracker, I know, Tony, you were talking about the RBA. If you want that, I'll drop that in the chat. Always good to keep a little tab. So this is the tab that I keep. Where's my cursor? I have a little central bank tab. So I've got the Federal Reserve, European Central Bank, Bank of England, RBNZ, Australia, Reserve Bank Australia, Bank of Canada, Bank of Japan, Swiss National Bank, the RBA rate tracker. I then have other little bits as well. So look, you've got the world government bond yields here. Okay. So these are like the 10-year government bond yields against each other. So you've got Switzerland, Japan, all that kind of stuff. So you got the bank rate 0.25%. I wonder if Norway is in this list. Can you like do it alphabetically? No. So Norway 4.5%. Current 10 years up at 4.18%. Okay. Right then, guys, we've been going for about 45 minutes. I'm probably going to leave it there. There's not a huge amount in terms of opportunity in the market, I feel. You know, like I said, I'm in silver long, but that's kind of where I'm at the moment. I think if the volatility index continues to fall, then stock markets should rebound, because usually the markets are pretty good in those environments. Will be interesting to see how the next kind of couple of days play out. We've got the UK statement coming tomorrow, so I'll update you on that on Thursday. But yeah, thank you for joining me, guys. I'm going to leave it there. If you have any comments, questions, please feel free to leave it on the video after, or, you know, if you want to come find me on LinkedIn, you can come find me on LinkedIn as well. So thanks, guys. I'm going to leave it there. Have a great rest of your trading day, and I'll speak to you soon. Cheers.